Bismillah. Assalamu alaikum, everyone. We are using a different platform today. So I'm just making sure I've got my bearings. But I can see there's about 50 of us who've joined. Assalamu alaikum, everyone. Hope you guys are well. We'll give it, say, a minute or two before we start. Looks like your network or something. Arif, is that something on our side? Can you hear us clearly, everyone? Arif is saying it's frozen. We'll just get our team to have a bit of a double check. I'm getting the thumbs up from the team. Rashid and FA, I assume when you say yes, that means everything's okay. Oh, perfect. Thank you, Amir. Arif, it looks like it's you, so give it a refresh and hopefully that'll fix things. Okay, perfect. People are pouring in. We're at 68 people now, inshallah. And like I said, I hope the month of Ramadan has gone well for you all. It's we were planning to do this webinar a few weeks earlier, but we thought actually a lot of people are on leave in the last 10 days, and we wanted to potentially do this after the 27th night as people really focus and make an increased amount of intention with regards to their ibadah and how they want to continue outside of Ramadan. So it felt like this was the perfect time to put this in. Okay, I am going to ask the team if I can get started.
Yeah, just ignore the comments.
Sure. Okay, I've been told to ignore the comments, but the questions will come up eventually. So please do, as we go through the session, please do ask your questions. Please do comment on what you see. And like I said, the team are looking at your comments and will answer them throughout the session, inshallah. We will answer the questions at the end. Okay, Bismillah. So yeah, as I spoke about initially, this is the month of Ramadan. It's a month of reflection. And a lot of people talk about, okay, who do they want to be outside of Ramadan? There's always that intention of you want to end the month better than how you entered it. You want to leave the month better than how you entered it. And we talk about everything. We talk about, being more conscious on how much time you're spending on social media, being conscious about allocating time for Quran, making sure that your salah, you're praying on time. All of these things, you're making those resolutions for yourself at the end of the month. But what I argue and what has come up with a lot of people is money is not separate from that. Just the same way we're looking at our deen from a worship perspective, what we're doing day in, day out. Ramadan is a time where we actually look at, okay, what we earn, what we spend, what we avoid. It all matters. Allah will ask us. There's 5 questions that Allah will ask us. It's what is purpose and how did we live our life? How did we spend our youth? But then the 2 questions are about wealth. How did we earn our money and how did we spend our money? 2 out of the 5 questions are about our finances. And so I mentioned, and it was a TikTok video that we posted yesterday, that actually during Eid and the week after Ramadan, we actually receive a spike in people wanting to contact us, wanting to learn more about halal home financing. And so we truly do believe that this month people do reflect on their finances as well. So yes, what I'm saying is it's a pleasure that you guys are all here. And hopefully, what we cover answers a lot of your questions.
Is there a chance that you can just record the session?
Oh, yes. We want to record this session. I'm going to just defer to one of my colleagues.
Click that.
There's a recording button. Record locally. Oh,
So it's recording by default.
yes. We will double check if this session is recorded or not. It looks like it's not. However, we're going to be running these sessions regularly as the months go on. I'm just seeing here. There's a record. Yeah, it's recording in progress. Okay, and we'll send it across to all those that registered for the event. Okay, khair. Okay, tonight's journey, or this evening's journey, is we're going to talk about the Muslim home ownership gap in the UK. We're going to talk about how that's changing. Then we're going to talk about why home ownership matters beyond just an investment. And then we're going to talk about the intricacies, the details of Islamic finance. How does an Islamic home purchase plan, aka an Islamic mortgage, how does that actually work? And then your practical paths to halal home ownership. And the caveat there, I'll make this a little bit bigger for myself. All right, here we go. The caveat there is I am not a scholar. I'm not here to give religious advice or rulings. This is an educational event. It's not meant to be seen as financial advice either. But what I will be talking about is rulings where appropriate from the ulama, the scholars, and sharing what we do at StrideUp as well. Okay, where are we today? The home ownership and why it exists. So currently the home ownership gap is quite big. There's a 16% home ownership gap compared to the UK average and Muslim households. 63% for the UK average and 47% for Muslim households. There's hundreds of thousands of Muslim families without that stability and that wealth building that home ownership brings. And what does that mean? Or why does this gap exist? Number of reasons. We are a younger demographic than the UK average. Our average age is 33 years old, whereas the national average is 40. We predominantly live in some of the most expensive cities. 46% of Muslims live in London alone. And then when you add in Birmingham, Manchester, you've got almost 2/3 of the Muslim population just there. And then also access to Islamic home financing is actually quite limited. There's been only one, maybe two, maybe three players in the market. But again, what I would like to share is that this is changing. As you can see, something is changing because there's a wave of hope, a new generation of Muslims that are ready to own and the facility and tools around them to actually support that growing need. So in terms of the next generation, again, you guys, an average of, you could be in your 20s, 30s, 40s, 50s even. In terms of the new generation, we're actually obtaining higher levels of education at a higher rate than the UK average, 54% compared to 42% in the UK average. 54% are degree holders of this younger Muslim generation. But also the home ownership aspiration is actually much higher for Muslims as well, 78% compared to 63%. So that intent is growing for the Muslim market, but actually falling for the UK average. So as a whole, we're potentially in a position where the Muslim market or the Muslim audience is more educated, more ambitious, and more ready than ever to get into home ownership. And then with that growing desire, growing need, the Islamic finance market is growing with it. So here are a number of the players involved, and again, across savings, investing, home ownership, but there's also a debit card, banking, everyday banking solutions that are coming in as well. And it's a very Genuinely, I'm not saying this because I work in the sector, but it's actually a very, very exciting time to be a part of the Islamic finance sector. And again, to double down and run home with that fact is the market is growing. 6 billion market, Islamic home financing, 20% year-on-year market growth. And then we're seeing more and more providers enter the market. There's about 2, 3, 4 entering the market just this year. So why does home ownership matter? Why are you guys all on this call to learn about home ownership? Why, beyond the investment, what does it mean? And so a home is often discussed as an asset, an investment, a wealth building vehicle, which it absolutely is, but that misses something that is far more important. A home is where your children grow up, where your family is rooted, and actually it's where you belong. And there's data to back that up. There was a study done by an organization called Muslim Census this year, where of all key factors of belonging, so the highest sense of belonging, the strongest sense of safety, the strongest sense of civic engagement, meaning activity in your local community, grassroots community, be that your masajid or local shops, libraries, and so on. They are all the highest amongst the demographic that own their home through an Islamic mortgage. So again, split up across people that are living in social housing, council housing, private rent, living with a conventional mortgage, and then with Islamic home financing. Those with an Islamic home financing plan have the highest sense of belonging in this country. And again, in a time where belonging is in question, it's a very, very clear indicator that this solution and people that go down this route have a heightened sense of that belonging. And then also stability. Stability is such a key point here. There was a survey done a few years back of people that had entered their retirement age, and they compared renters versus homeowners. For renters, 23% of people felt secure about retirement. For homeowners, that was 67%, almost triple the sense of security and confidence in their retirement. And then the average housing cost, £300 to £400 a month for homeowners entering their retirement. And again, almost triple that. Average housing cost, £1,200 to £1,500 a month. Again, this is UK data, UK statistics. For homeowners, you've got that benefit of the freedom to downsize or release equity. I will share the source of this data. We'll send an email out with all the sources that I mentioned today. But yeah, freedom to downsize, release equity. There's that peace of mind about your aging in one place. And then also there's an asset to pass on to your children. Whereas for renters, there is that vulnerability of rent raises, rental increases, but then that fear of displacement at an old age. And again, when you're thinking about your legacy and what you leave behind, there's no asset that you leave as well for your children and grandchildren. And speaking on that point about your children and grandchildren, having a firm footing in the ground, brick and mortar, your own home, builds stability for your family. So stability for your children, consistent schooling for them, lasting friendships and that community tie, the things that shape who your children become. There's that ability to have long-term planning, choosing an area based on schools, masajid, locality within your family, brothers and sisters, aunties and uncles. Are you close within that network? And then, yeah, putting down that roots with real intention. Wealth transfer, as I mentioned, passing on that asset to your children and future generations. And then also going back to that belonging point, and something that shouldn't be underestimated is community building. Once you have stability in an area And as we have seen, you can name it, people that bought homes in an area, in a neighborhood, a community builds and fosters from it. And when Muslim families stay, then Muslim communities thrive. And home ownership builds those neighborhoods that we would like to live in. And we're very, very, very fortunate. In the UK, I've seen, these communities grow and build, and the basis of it obviously starts from the masjid, but then starts from people staying in their homes, growing in their homes, owning their homes, and growing from there. Okay, now the interesting bit. Islamic alternative, how it really works and why it matters. Okay, how conventional banks work. And I'm going to try to explain this as clear as I can. I know there might be questions, and I'll try and answer them as I go through. But then we will get to it at the end if you feel like your questions aren't answered. Okay, how a conventional bank works is it's a relationship between you and a lender, right? So let's say you have a 20% deposit of £60,000 and you want to buy a home that's worth £300,000. What you go to the bank, conventional bank or conventional lender, and they will give you directly £240,000, which you then take with your £60,000 and buy your home. And it's owned entirely by you. And what the lender charges as a sort of as a profit for their £240,000 that they've put in is a charge on you as interest. The lender profits from money itself, completely disconnected from the property. As you can see, there is no line towards the property that the lender has that relationship with. They've lent you that money, you've now gone and purchased the property. And that's how conventional mortgages work. Whereas, before we get into the diagram for Islamic mortgages, I want to ensure that we want to tackle these head on. So we've heard the noise around Islamic mortgages. It's just interest with a different name. It's more expensive. Scholars don't agree. The FCA treats it the same as a mortgage. And these are things that we want to tackle, again, in these slides that we're about to go through. So we're not dodging them. We know that these might be concerns and questions you might have. So let's go about answering them. So how does StrideUp's home finance actually work? And we'll use the exact same example of someone that has £60,000 saved, wanting to buy their home that is worth £300,000. So again, they will come to StrideUp and say, hey, I've got £60,000 and I want to buy this home for £300,000. Short way of telling you, yes, we do a valuation on the property. We assess if this is a good investment, if it is actually worth £300,000. But then we go in and give £240,000 and we start off, we give £240,000 and we co-own the property as partners. So you have your 20% in the property and StrideUp as the Islamic fintech owns 80% on the property. And this model is called an ijara diminishing musharaka model, where the monthly payment now is rent on the share that you do not own, which is the 80%, and equity acquisition. So allowing you as the homeowner to increase your ownership percentage as the time goes on. And so in month one, you might own 20% and pay rent on 80%. But in month 150, as an example, you might own 50% and pay rent on 50%. And then in month 300, you might own 100% and the property is fully yours. The title deed will now then be passed over in your name. Initially, the title deed is split, with StrideUp being a co-owner of the property as well. I can see questions being answered in the chat, so I will continue on with the presentation. Understanding the ijara diminishing musharaka model. So in plain English, because this jargon can get in the way of you really going forwards and buying your home, ijara means lease slash rental. So ijara meaning you pay rent on the share that you don't own yet. There's no different from renting from a landlord. You pay for what you use. The musharaka definition is partnership. You and the Islamic fintech, StrideUp in this example, co-own the property together. You're not a borrower, you're a partner with shared ownership rights. And then diminishing, of course, meaning diminishing, another word for that being decreasing. The provider's share decreases over time because you're buying it back. You're buying back the equity. So with every month, your rent is decreasing and your buyback is increasing, if that makes sense. Right. So what is fundamentally different? Why is it fundamentally different? A conventional mortgage, the legal structure is a loan agreement, clear as day. An Islamic HPP, home purchase plan, FCA definition is a sale and lease back agreement. The provider's role in conventional mortgage world is a lender, whereas in the HPP, it's a co-owner and partner. StrideUp is FCA regulated, so we do have to abide by FCA regulations, but we do it so that the structure is very, very clear that we are a co-owner and partner. And what you pay interest on money lent in conventional mortgage world. In Islamic HPP, you pay rent on the share that you do not own, and you pay an equity acquisition to increase your percentage ownership. The provider's assets of what a conventional mortgage will give you is a debt that you owe them, whereas the HPP is a share. We own a share in a real physical property with you. And the nature of the charge, conventional is money from riba, universally agreed. And for a HPP, it's a payment for a genuine use of an asset, which is the property that you are living in. One creates money from money, and the other shares ownership of a real asset. Let's talk about certifications. StrideUp's HPP, specifically StrideUp's HPP, is certified by Mufti Faraz Adam and Amana Advisors. It follows the Ijara diminishing musharaka model, and we are regulated, approved by the FCA, which is a huge stamp of approval. But this model is a universal model used globally, and it's also approved by IOFI, which is one of the major scholarly bodies in the world. It's also approved by Mufti Taqi Usmani, who is most known as one of the forefathers of Islamic finance in the Western world, and multiple Sharia boards across the globe. So the European Council for Fatwa and Research, Sharia boards of Al Rayyan, Gatehouse, and major Islamic institutions in Malaysia, in the Middle East, and so on and so forth. So again, to reiterate, this is not one scholar's opinion. It's a broadly accepted structure with decades of scholarly consensus. And again, let's talk about why is it more expensive? Why is it more expensive? Conventional banks and Islamic fintechs operate on completely different rules, guardrails, and ways of working. So comparing them is almost like comparing apples and oranges, but we understand that this is a comparison that people will make, and we've all made them, right? How conventional banks work is they get cheaper funding, right? Customers' deposits is a source of capital. They're getting money for almost zero cost. People leaving money in their bank accounts, they can then loan that out at a multiple, sometimes 20, 25, 30x of what they hold. But also, they have the ability that the Bank of England have given them of money creation. So they're not to go too much into the detail of fractional reserve banking, but again, they can create money out of nothing depending on how much they currently hold. So let's say they can lend out £20 for every £1 held in their reserve. So then their cost of capital is much less. We're talking even from 0, 1, 2, 3%, almost nothing to obtain funds. And that result is lower headline rates because the system is built in their favor. When it comes to Islamic fintechs, we're getting real capital funded by investors who want competitive returns. One of our biggest funders are a Curate Capital, who you may have heard of, the branch of Islamic finance guru. And so these are real people coming in with their money, looking for a return, but also looking to support the Islamic home ownership economy. And so we do have to give them a return on their money as well. And we don't have a money printer in our business, as it's universally deemed as impermissible. No money creation. We have genuine real capital to back every home financed. And so our cost of capital currently is around 6 to 8%, where investors expect real returns for real risk. And the result is higher rates because this is asset-backed finance. But it's interesting to say that even though we are dealing with completely two separate lines of funding, the gap is closing. So I think the current gap is around, for the average gap is about 1.5%. But in previous years, that was 3, 4, 5% in terms of the gap. And so as the market grows, it's currently at 6 billion, the market size will start creating scale. Also, more competition arriving in the space. We've had a few new entrants this year. Again, the aim there is that pricing will go down as competition grows. And then as the sector proves itself over the years, the funding costs will also go down because then this becomes a more secure, a less riskier asset class for investors. So there is optimism in the market for Islamic finance. There was an RMBS that we completed just last year, a massive stamp of approval and credibility of the Islamic finance sector, which we know will grow over the next few years, inshallah. So even today, paying a premium for what you believe in isn't a compromise. It's a choice, and it's yours to really make. And so I wanted to kind of touch on, you may have heard this example given, but I think it's absolutely worth sharing. This halal premium, this thought experiment. You walk into a restaurant and you see the menu and you see the non-halal steak for £10. Below that, you will see the HMC certified steak for £13. What do you choose? Right? It's an interesting question because it's not really a question. Everyone knows unanimously they would pick the HMC certified steak. Yes, it might be £3 more, but it's a set of principles. It's in Islam, we have halal certified meat, and so this is the meat that I have. And that's why, again, we don't like comparing to conventional because it's not competition. It's two completely different products built on completely different values. The cost conversation is, while valid, is secondary to what this choice actually represents. This choice is between non-halal and halal certified. That's the choice that you're making. And so ultimately we believe The way you choose to eat and the way you choose to finance your home are spiritual decisions. We talk a lot about numbers, we talk about deposits, we talk about rates, we talk about comparisons, but numbers aren't why you're here today. When you choose how to finance your home, again, you're not making a financial decision. You're choosing the foundation in which to build your family, your family's home, your family's life. You're making that real intention on how that is built. And so choosing halal, again, it's the month of Ramadan, so we were questioning how hard we go in with this. And I'll keep it light here, but it's choosing something that you can be confident and comfortable with when standing before Allah and saying that in the biggest, most complicated transaction of your life, it was actually for you an act of worship. And so that there does not have value that you can capture in a spreadsheet. That there is value that you capture in your heart, and you'll rest assured that the reward is with you. And so it's again a point that you cannot underestimate is that your home should be a source of barakah, not just equity. And your home being a source of barakah is directly linked to how you have that home in the first place. Okay, bit heavy there, but let's talk about pathways to ownership. You want to now know the practical steps of how you get keys in your hand. The first step is to build your deposit. The UK national average deposit is 20%, but the StrideUp average is 30%. It means that Muslim buyers are a lot more intentional and disciplined savers that with a much higher intent. And what a higher deposit means is lower monthly payments, but more equity from day one. It reflects a community that takes home ownership seriously. Currently, our lowest deposit is 15%. We're looking at introducing our 10% back into the market, but at the moment it's at 15%. And so once you have your deposit, you can get what we call a decision in principle. So this is essentially an assessment of how much you can finance, what can be your budget. So this will be your paper to say, okay, with this, now I can go and explore on your Zooplas and your Rightmoves, on your auctions, the properties that are out there and what fits the budget that I have. It takes about 10 minutes to complete online. There's no impact on your credit score, and these are valid up to 90 days. And like I said, the output there is, okay, I can now finance up to so on and so forth. So my budget is this. And what you'll need to do that is just to understand what your annual salary is and your deposit details. Yeah, they're all that you really need. And you can start that on our website, StrideUp.co, and complete that online, get an outcome immediately and move forwards from there. And so what do you do from there? So we've covered steps 1 and 2, which is building a deposit and getting your dip. Then it's all about speaking to people, speaking to our team, speaking to our expert advisors, and understanding what option suits you. So it's a very personal call, tailored to your circumstances, and you will leave that with clarity. And so then you'll be able to find your home. And once you found your home, you'll come back and say, hey, I've had an offer accepted for this home, for this 3-bed house in Leighton. I'm really excited. It looks exactly how I want it. I've got ideas to make the kitchen like this and the loft like this. And you'll come to us and we will then start the underwriting process, which typically takes, it says here 2 to 4 weeks, but actually this should take no more than about 2 weeks for the majority of cases. If your case is fairly straightforward, hopefully even less than that. And then at the point of underwriting, you will then get an offer issued to you saying, awesome, you've passed everything we need in terms of assessing you and the property. It's something that we are comfortable to invest into and be partners with you in owning this property. And so you'll be issued your offer, you'll be able to accept your offer, and then that kicks off something called a conveyancing process, which typically takes anything between 2 to 3 months between solicitors. It's a fairly long-winded process, but this is where it's pretty standard across the industry when you're buying a home. Maybe you guys know or have been through that process already, so you guys know very well what that process entails. And so that is the journey. But what we can say is you definitely won't be walking it alone. Our team is with you at every step. Any question, any query, any concern, the team is here to alleviate those and guide you through the process to ensure that you're making the best decision possible for you and your family. And so what we believe at StrideUp is that every family deserves a home that they can call their own. We believe that faith and finance truly can and should work together. Transparency beats jargon every single time, and the halal option should absolutely be the easy option, especially in the modern day with the tech available. We should be making the halal option an easy option. It shouldn't require you to jump through hoops, to make sacrifices. It should be something that is seamless. And so we're not here to convince you, we're here to empower you with the information that you need to ultimately make the right decision for you. Okay, next steps before we open out to Q&A is please do visit our website. Everything we've covered here today, you will find in more detail on our website. You'll see calculators on the website as well, which you can play around with. And then if you're interested, if you really want to know like how much you can finance, don't be afraid. Complete a dip. It takes 10 minutes. You get your outcome immediately. And then you'll be able to go from there to book a call and essentially go from there, get some knowledge on what you need, maybe now start browsing the market. Or if you're in a position where you already have an offer accepted or you're doing a refinance, the case is a little bit more straightforward. You crack on with the process quite quickly. Right, I think that is the last slide from me. I would like to welcome Adil, who will support on the Q&A. Assalamu alaikum, Adil.
Walaikum assalam wa rahmatullah. Firstly, thank you everyone so much for attending this webinar. It's great to see, mashallah, so many of you showing interest in Sharia-compliant home finance solutions. And a lot of you have had some very, very good questions, which the team so far have been able to respond to. I'm just going to go through, of course, we are limited for time, but I'm going to try my level best to get through as many questions within the time that we have. So I would apologize already if I don't get a chance to respond to everyone, but again, I will try my absolute level best to do so. Okay, so if we see here. Okay, so with regards to minimum deposit requirement, currently for our home purchase plan, for residential, we currently require 15% deposit. From time to time, we have had times where we've allowed 10% deposit, and we are always working towards trying to make our deposit requirements as low as possible. So at the moment, 15%, but hopefully, inshallah, we should be able to start doing 10% soon as well. Next question. How would a refinance work for a buy-to-let property? Now, refinancing for a buy-to-let property would work pretty much similar as it would for a home purchase plan. Now, even if you have got tenants in situ within the property, that's not necessarily a problem. The only thing that we may require in that regard is perhaps a new tenancy agreement may need to be drafted. But other than that, you can switch buy-to-let properties across to us. And please note that even for buy-to-let properties, our minimum age requirement is 18. So someone can be a first-time buyer as well as a first-time landlord. There's no issues in regards to that. What else was there? Market value. So Rihanna, you just asked if we wanted to purchase the full share for a home after a few years, would this be based on market value or the initial value? Okay, very good question. Now, when it comes to settling the outstanding finance, that would be based upon the initial, basically the initial amount that was agreed at the outset. So for example, if let's say today, Rana, you purchase a property for, let's say, £300,000. Well, it have to be outside of London. I don't think I'd be able to find anything for 300,000 within London. Let's say £300,000, and let's say the finance amount on that is £200,000. And over time, over the next few years, you're paying the finance off slowly. And for argument's sake, let's say, in about 5 years' time, the outstanding finance is about 150,000. But a property, for whatever reason, is now £600,000, right? Now, we wouldn't say, oh, because the property is increased by so much value, now, you have to pay us, 50% of whatever it's increased by. No. Whatever's outstanding, right, that's what you pay us. Whatever you have made as a profit beyond that would be for yourself to benefit from and keep. Okay, I hope that answers the question. Are traditional mortgage lenders really scrutinize SMB owners compared to employees? Do Islamic finance providers adopt in the same manner? How does sometimes an application process work for self-employed applicants, especially those declaring minimum salary dividends? Okay, so Amr, regarding self-employed applicants, we can accept 1 year self-employment. So compared to a lot of other conventional lenders and other, Sharia-compliant, home finance providers who require 2 years self-employment, we only require 1 year. Also, if someone's a contractor, we know people from a medical background, work locum or bank, we can accept those as not a problem. People within medical background, dentist. We've recently accepted someone that had recently just was about to start the employment. They were switching from one job to another, and all they had for us was a copy of the contract. And alhamdulillah, we were able to assist them. So we have very, very straightforward process. We try to get rid of as much of the, red taping as possible. So a lot of people have said that as flexible as we have been, they've not even found conventional finance providers to be so. Okay, so Sophia, you asked, is there any reason or condition that you can reject our application or reject our mortgage? So our home purchase plan, of course, not a mortgage, but yes, applications can be rejected. For certain reasons, let's just say, at the end of the day, we need to ensure as as we mentioned, we are FCA regulated. So we have a responsibility on our shoulders to ensure that we're not burdening consumers with, financing which they may not be able to, pay towards. So if we feel that someone has not been forthcoming, that let's say someone's forged the documentation, use ChatGPT to make up the bank statement, the pay slips, and send them over to us, we do reserve the right, if we do feel that this finance is not suitable for our product, not suitable for someone, then we do reserve the right to reject a home finance application. Okay. Someone cannot meet the month. So what happens in the event that someone cannot meet their monthly payments? Again, Daraj, a very good question. Now, bearing in mind myself, if I just give us a bit of background to myself, I've been in the Islamic finance industry for over a decade now, so about 12 years. Prior to this, I was at another home finance provider known as Islamic Bank of Britain, which formerly then became Al Rayyan Bank. Now, at the time that we were there, and of course, the same kind of culture has carried across to StrideUp as well, in the sense that where if someone is unable to meet their payments, of course, our first concern will be to find out exactly what's happening. We'd reach out to them and try to understand the situation. It could be that someone's hit a short-term kind of issue. It could be like job loss, where they literally might need a couple months to get back on their feet. In that instance, we would probably speak to them. Perhaps they might need a payment holiday, where the payments are put on hold for a couple months up until they're able to start, their home finance payments again. If in certain circumstances, if it's a long-term issue, let's just say that they're unable to maintain the payments, and for the foreseeable future, they may not be able to maintain payments. You may have the question, okay, is there anybody else that we can perhaps try adding on? So if it's a sole application, is it perhaps worth seeing if there's like a friend or a family member that might be able to be added on to be able to help with the payments? If that is not possible, then perhaps you may want to consider switching it to a rental property. So the applicant may decide to move in with family members, perhaps, and if you don't want to lose property, they might decide to rent the property out. So all of these, options we would perhaps try and speak. And even in some circumstances, the customer might be like, okay, do you know what? This is not really working for me. I'd rather just put my property in for sale, and that way settle whatever needs to settle with StrideUp share, and then take whatever the profit I've accrued over the years, and perhaps buy perhaps something smaller, or buy something where I don't necessarily need to have any financing. I hope that answered the question. Okay, what happens if StrideUp went bankrupt? What would be the implications on the buyer and the property? So thank you for that, Wes. Very good question. Now, in that sense, because we are FCA regulated, and there are very few Islamic finance providers in the UK that have got the FCA regulation. We are also part of what's known as a Financial Services Compensation Scheme. Now, you may want to do a bit of research into this, but this gives consumers protection from finance providers. So you have the same level of protection as you would from the same as any conventional high street provider, where each applicant is covered up to £120,000 in an instance that we are unable to fulfill our obligations. Yeah. Okay.
There's one question that's got a few thumbs up.
Okay.
From Zara. Say I have 200k mortgage with you and pay £950 per month. I have extra money to buy a share or payment automatically. Can I increase my share property? Please explain. Overpayments.
Okay, yeah. So overpayments. So in regards to overpayments, you're able to make 10 within a fixed period. So the way the products are structured, typically at the moment, because we are still relatively new, we do not have a great range of products. As you can see, we are slowly still building up a team. So we have a 2-year fixed product, we have a 5-year fixed product. Within a fixed period, you can make up to 10% overpayment each year. So let's just say if property value is how much? 250,000. Was it £250,000? Okay, £250,000. And let's say the finance amount is 200,000. Yeah, with a 20% deposit. Straightforward scenario. In a first year, you can make 10% of the finance amount as an overpayment, and then in a following year, you make another 10% of that. Now, when you make a 10% overpayment, that goes directly towards the outstanding share. Yeah. And by doing so, you can significantly shorten the period of time that you finance it. So, for example, someone could start off on, let's say, like a 25-year term, but before they know it, they could settle the full finance of 5 years, and there'll be nothing else to be paid to StrideUp. Basically, we're not going to say, oh no, because you've settled it sooner, you still need to pay us £100,000. Basically, no. The moment you settle an entire finance amount, I think there will be just a small cost about £200 plus VAT or something like that, just to remove StrideUp from the agreement. But that's a legal cost that we incur. That's not like a penalty or of any sort. They're literally just for the solicitors to. Sorry, I'm not very I'm a bit slower, but yeah. Were there any other questions, Sadiq, that we need to?
No, that was the main one that was missed. The others that are coming in,
Okay.
I think are being answered.
Okay, guys, just in case anyone was wondering how to go about registering interest, if you go onto our website, which is www.strideup.co, on the top right hand side, there's a section called Get Started, where you'd be able to do a small fact find, and at the end of it, you'll be able to book an introductory call with one of our team of advisors, who are a lot more knowledgeable, mashallah, in terms of, even if you wanted like a breakdown, if I'm going X amount of property value, X amount of finance, this kind of term, what amount in payments likely to be. The advising team can give you full breakdown. And you can constantly book in those introductory calls as much as it's not that one call, and that's it, just to get a bit better understanding. If you are not comfortable putting questions out here, if you have any kind of personal circumstances which you do not wish to discuss on online forum, then please do feel free to book in introductory call with our advisors. Are we okay for time?
Yeah, we've got 9 minutes.
Oh, excellent. Okay, let's carry on then.
There's one in the shariah contract, do you share risk?
Whose question was that?
F.
Okay, so under admission musharaka, so bearing in mind, FA, sorry, I would have said, I'm not entirely sure, but our product, the Islamic Home Purchase Plan, is based upon ijara with diminishing musharaka, basically. So what that basically means, that you have a diminishing ownership agreement with StrideUp, as well as the ijara element, whereby you pay rent to StrideUp for the share which you do not currently own. Now, in the way that this product has been structured, basically, we've thought about how best to do it, because there's certain elements within the structure which we thought, okay, how do we go about it? So firstly, the ijara structure in terms of renting the property, our share the property out. So who do we rent the property out to? Do we just put it on a estate agency and say, right, we've got 8% share in, Mr. Adu Ali's property? Do we just put it on the market and put in whoever we want? We've got 8% share in a property. We can put in, reserved right to put in whoever we want. Realistically speaking, it makes a lot more sense for the customer, who is buying the property to benefit from, to live in and enjoy the property with their family, to be able to live in the property. So we rent our share to the customer, right? For them to benefit from. And now, of course, we are not able to actively be residing there. I mean, if we were living in a property within a share that we own, and had time to be able to go and fix the property and paint the walls and mow your lawn, basically, then then that's a different conversation. But effectively, as you would be the one benefiting from the property and living in it, part of a contract, it sets yourself as an agent who is responsible for maintaining the property and living in it, right? Now, this question regarding sharing in a profit or sharing in the loss, basically. Now, the way the home purchase plan has been structured prior to even StrideUp coming in, we have done it in a way that if there is profit that is made in the property, right, that we forego our share property. So, for example, a property worth 300,000 today is now going to be worth £750,000 in 5-6 years' time, basically. That increase in value will be for the customer to benefit from. And likewise, in the same way that we forego our profit, if it comes in a circumstance where the property value decreases, the only way that would potentially be a problem is if you're looking to sell the property. The only thing that we would advise you in such circumstances is that not to sell it at negative value. But if you decide that no, I definitely want to sell, and even if you're likely to make a loss, we would say, okay, you cannot enforce us to take a share in the loss. If you're looking to sell it, then you would still need to settle whatever's outstanding with StrideUp. So yes, so in the same way, we forego the profit, basically the same way in terms of the loss element as well.
I think there's a lot of questions in the chat around people worried that they aren't using credit cards, so maybe
good
don't have
question.
relatively strong
It
credit
doesn't-
scores. Just
It doesn't matter.
Yeah. Assure them.
It doesn't matter. So yeah, because look, I mean, a lot of our customers, we get this all the time where someone's literally only got a current account, and that current account which they opened from the age of like 10, 12, which was a young person's account and became a current account. And other than that, they don't have a savings account, they don't have credit cards, some of them don't even have direct debit, some of them might just have a mobile phone. That's not a problem. We do not credit score. Basically, we do just like a rating just to make sure that nobody's got any defaults or CCJs, basically. Even if there are certain circumstances where someone has had like defaults or CCJs on their record, we do try to keep like an open mind. We had someone who had a was it CCJ or default, one or two, by tapping in and out using the wrong card on London Underground, right? And mashallah, it wasn't a case of not being able to afford it. They said that I was able to afford it. I did it on credit card, which you don't even use. And about a few months passed, and a statement came through saying, "Oh yeah, look, here's you've been summoned because you're not paying £9 something, And they're like, "What on earth?" Because the bank that they're using had identical credit card and debit card, so he mistakenly took out credit card where I was supposed to be using debit card. And so we used a very pragmatic approach to that. Okay, it makes sense. Did the customer, was he able to afford it at that point in time? Yes, it was. Is this a genuine error? Basically, yes, it was. So we kind of took a view that, okay, we will oversee it. But if someone, has a CCJ default due to poor payment in general, then of course that's a different argument altogether. But yeah, do not worry about not having credit card or having to build up a score before coming over to us. That's irrelevant. So long as you've been able to maintain, good payments, etc., and not falling into missed payments, then that's not a problem. Okay, so we'll make this the last question. A question or questions?
Last question. I think
I'm kind of probably enjoying this.
Yeah, some of the questions, I think transferring existing mortgage, that's a refinancing. We've spoken about that one. In terms of, will it be? I think some of these have been answered already. Mm-hmm. So maybe the people that have been quietly looking in the chat, thinking about the right time to ask a question, maybe here's your time. So can someone decide to pay more than their mortgage payment every month, and does it have any penalties? We've spoken about.
I like the question, Shamsuddin. Basically, we would love to be able to do that. Again, we are trying our best to become as techie as possible, right? At the moment, we are a few years behind in terms of, we're trying to get customers to be able to view their payments, etc. And that would be excellent if we're able to allow customers to make overpayments as and when they want to. At the moment, that facility is not there. Although, yes, you can make an overpayment up to 10% in a year. So whether you break that down into additional payments that you make, you can't necessarily just make it, and you can't add it on to your existing payment. It has to be made separately. Yeah, currently. But let's hope, inshallah, with a lot of brother Sadiq over here, mashallah, is doing some great work here at StrideUp, which of course we can't say at the moment. But inshallah, within the coming months, we hope to have, groundbreaking things going on over here, inshallah. So definitely stuff to watch out for. And guys, I cannot stress this enough. Please make sure to go onto our website, click and get started, and submit a decision in principle. And it's no obligations. You're not buying yourself. You're not doing no kind of credit check on yourself. It's literally just so that you can book in an introductory call with our advisors and just to get a grasp of your situation. So it might be you're not even ready, you may not be ready right now. You might be looking in about next 6 months or a year. You might want to inquire about your family members, etc. It's perfectly fine. You're not binding yourself to anything. And at the end of it, even if at the end of the conversation, if you felt, okay, this is maybe not for me, again, khair, that's not a problem whatsoever. Yep. So I think
to wrap this up, guys. So I've seen Fadila say you've tried an online inquiry. If you have submitted an online inquiry, what I would say is reach out to. There's a live chat on our website that you can contact someone, and they will absolutely get back to you as quick as possible. In terms of when we'll be available in Scotland and Wales, I don't think we'll be able to give you guys a date at this current point in time. But in terms of wrapping up the webinar, what I will say is Jazakallah khair for giving us some of your time. I hope this was beneficial. And what I will say is we hope to do this monthly, if not monthly, quarterly. So if there are people in your family, in your friendship circles that are interested in learning a little bit more, when we do have the next event, please do ensure you send the link to them, the registration link to them, and they can come on and ask their questions. Or if they urgently need those questions answered, just direct them to our website and they'll find their way. Again, they can speak to someone on the live chat. Can you post the official website on here? Yes, we can. I am about to type it in right now. There we go. So that there is our website. You can visit. You can learn a lot more about StrideUp, about how the product works, about the certification from Amana advisors, how they've got to that conclusion. And also everyone attending will be emailed the session, the recording, potentially, and also a survey of how you guys have found this webinar. Because like I said, we want to make sure that this is beneficial. If it is beneficial, we want to make sure that we continue on adding value to people that need it most, inshallah. Perfect. All right. Thank you so much for joining and enjoy your iftars. If we don't see each other, which most likely we won't, Eid Mubarak. And please, keep StrideUp in your du'as as we will yourselves. Take care of yourselves. Assalamu alaikum. Adil.
Thank you so much. Jazakallah khair. Assalamu alaikum wa barakatuh. We'll meet soon again, inshallah.
It's true there. Yeah.